Welcome back to another episode of Coffee and Stocks. In today's video, we are going to talk about today's market, especially since there is the voting coming up, which everyone, I'm pretty sure, is pretty excited about or pretty stressed about, like myself. Honestly, I'm pretty stressed. But before we get started, obviously, don't forget to subscribe to this channel. Drop that big, well, drop it, smash it, destroy it, kill it, whatever you want to do to that like button, because honestly, it does go a long way in supporting the channel, and I really do appreciate you guys. So let's keep going on pushing those subscribers up and pushing those likes up. And honestly, as we keep going up, I will be doing more giveaways for you guys as we've been doing on the previous videos. All right, so super excited about today. If we look at the heat map, it has been in a really green market, right? It's honestly, I didn't expect it to be this green today. I expected it to be a little bit more volatile. It was pretty stable to the upside. And then, I was looking at more stocks, and I was looking at more, markets and all that stuff. And honestly, it's pretty good. Now, this is based upon everyone thinking that we're going to have a straight count on the votes on the election tonight, and we're gonna know who's gonna win tonight. Now, there was some other people who were saying that if we don't have a clear winner today, that the market in the continuous week is gonna be more towards the negative side. So we'll have to see on that. As you can see, Apple up 1.5%, Amazon up almost 2%, etc., etc. JP Morgan up 3%, and obviously Tesla's not in the S&P 500, so we're gonna go ahead and look at Tesla. Tesla today opened around $409, which is $9 more than it closed yesterday. On the last 5 days, they have been up on a 1.82% to the upside. In the 1 month chart, they are still down 0.42%, but that is not that big of a deal. $423 from Tesla is pretty good. I currently do own some of Tesla, so that's pretty good on my portfolio. Now, let's get to the topic at hand. Is the market better on a Democratic president or a Republican president? And I know we don't want to get too into politics, but it does affect the market pretty well. And honestly, it doesn't matter much, right? In the previous decades, in the previous years, it's been shown that overall the market has a positive side. It only has a negative side when something dramatic happens, like the virus, when we got hit, or the market crash on housing. Now, for investors worried about how election will impact their portfolios over the long haul, fear not. Elections have seldom had a lasting impact on equity prices. Are Democrats better? Are Republicans or Democrats better for stocks? And listen to this, right? Data over the past 78 years show that party control over either chamber has relatively little to do with long-term changes in the broad S&P 500 stock index. Now, if you know, index are less volatile than just regular stocks. Index do have, it's like a pie chart, and it does have quite a bit of different companies in it. So this kind of gives you like a little gray area. It doesn't have that much volatility on the S&P 500 stock index, but stocks in general, it kind of follows that area, right? So starting in 1942, the numbers indicate that Republican and Democratic majorities in the House and Senate have had little impact on stock prices in the 2 years following the election. The data yields similar results for the November to November cycle, which is a gauge of market sentiment to the election, as well as January to January, which shows the actual market performance of Congress. Now, we're going to look a little bit more into detail on this little thing, presidents and stocks. Data compiled by LPL Financial shows that beginning in 1950, the average annual stock return was at 17.2% under a split Congress, which honestly, that is still a pretty good return. Now, it does go lower, 13.4% when Republicans held both chambers and 10.7% when Democrats had control. Yes, 3.4% higher or 2.7% higher than Democrats if they had control, which is a little bit more return for your money. I get it, but it's still 10% return, which is still pretty good. I know we've had the current president say that, the stock market is going to crash if we have a Democrat president and whatnot. And a lot of people have been feeding into that saying, but it's not true, as data here shows you. Of all the possible combinations, stocks appear to perform best when a Democrat is in the White House and the Congress is split. The highest return happened when a Democrat is president and Republicans control the Congress. If we look at this chart here, and mind, it has the years here. A unified government, right? When a Democratic president and Congress has the power, the average S&P 500 change is 9.8%. Republican president and Congress, 12.9%. Now, the highest one we see here is when we have a Democrat president and a House and Senate split between parties, which gives you a return of 13.6%. So overall, are we having any major issues with the election today? No, other than it's super stressful and everyone's going to be watching it and everyone's just talking up their butts. Yes, right? So let's move forward with this saying. However, the vote plays out Tuesday, which is today. At least 90% of portfolio strategies will be identical under either win, right? This is super important to understand, because if a lot of people are just selling like crazy, that's not good, because that's panic selling. Now, if we look at another image here, sorry, we see that growth of $1 invested in the S&P 500 January 1926 to December 2019. And yes, this is last year. I get it. So as we see here, we went under if you've just invested $1, right? But if you invested $1, as you can see here, it just continuously goes up and up and up. And yes, as you can see here, after Obama left office, Trump kind of, inherited this area right here, but it's still gone up. Now, I'm not trying to say that, there's a huge difference between Republican presidents and Democratic presidents. As you can see here, the continuous growth just keeps going to the upside. Now, if a presidential election years throughout history, this is throughout history, since 1928, right? When a new president is elected, we have a positive side of 9.3% in the stock market. And this is bonds. Yellow is bonds, and then orange is stocks. 6.7% with bonds. Obviously, when you have stocks and bonds, they kind of have the opposite effect. So when stocks go up, bonds don't tend to go up that fast, right? All presidential election years. So they were saying that, when the stock market is a little bit higher when there is a presidential election year, quote unquote, than the following year, and that's because there is higher volatility, and if you read the market correct, you're able to get better returns up there. Now, incumbent president wins. That means if the current president that holds it right now wins again, yes, we do have a major 13.4% to the upside increase. I understand that, but let's not be scared if either person wins. We're still able to get huge returns, right? So let's not be scared on that. Historically, US stocks and bonds tend to perform better during election year compared to the year after. For international equities, the opposite has been the case, right? So if you have international stocks and all that stuff, you might have to look at that into more detail, right? So is the presidential election gonna affect us? Not much. It might have a little bit more volatility because of what each president or each person is saying. Obviously, we just followed October, which had one of the most volatile times in the stock market. We saw, say for example, like Hyliion, who went down on pricing. Lordstown Motors went down. Nikola. There's overall in the overall market, you're gonna have high volatility. Don't try to beat the market, because a lot of people say, oh, you know what, President Trump is not gonna win again, so I'm gonna sell my stocks because he said that the stock market is gonna crash. Don't feed into that stuff. Obviously, do your homework. I'm not a financial advisor, but do your homework beforehand before investing in anything. If you do want to invest in something that is solid, that is that has low volatility, do go and look into index funds or ETFs. Those are usually higher, not higher, but less volatility than regular stocks. If you want to get into bonds has less volatility as well. So there's definitely different plays that you could do, especially going after the election. All right, so anyways, that was today's video. Hopefully you guys liked it. There isn't much change in the stock market, hopefully coming tomorrow, depending on what each person says. But please do your homework before you start investing. Obviously, I'm not a financial advisor. Don't forget to drop a like on this video, as well as destroy that amazing subscribe button, and let's keep increasing the subscribers. Once we do reach 700 subscribers, I will be doing a $70 e-gift card giveaway. So please don't forget to subscribe and like the video. And I will see you guys next time on Coffee and Stocks.